just in. Right now, AI is doing more than writing poems, sorting spreadsheets, and helping teenagers fake essays. It's holding up the entire US economy. Not metaphorically, not as a side effect, directly. According to Futurism, AI investment has become so massive, it's now the main force driving economic growth in the United States. Think stimulus package, but privately funded and completely unregulated. So what happens if that money vanishes? You would think consumer spending drives the economy. You buy a fridge, someone else buys a car, everyone's happy. But 2025 had other plans. Capital spending on AI infrastructure has had a bigger impact on US economic growth this year than all consumer spending put together. That's not a mistake. This level of spending hasn't been seen since the dot-com boom. Investor Paul Kedrowski says it's already exceeded the telecom and internet infrastructure surge that led to the 2000 bubble. And we all know how that ended. Except this time, it's worse. Why? Because this isn't just funding websites and search engines. It's propping up everything from cloud computing to data centers to utilities. Entire industries are being built on a technology that hasn't proven it can deliver consistent financial returns. Companies are riding the AI hype wave hard. 9 AI companies have now joined the $1 trillion valuation club. Nvidia alone tripled to $4 trillion in under a year. Microsoft, hot on its heels, matched that number recently. And it's not just the big names. Billions are being thrown at startups with no business model beyond we're doing AI stuff. And here's where it gets a little weird. Microsoft just reported that it spent $30 billion in one quarter building out its AI capabilities. That's not product sales or profits, that's infrastructure. And who's buying it? Other AI companies trying to do the same thing. In short, we're looking at a feedback loop. AI companies buy AI computing power from other AI companies using investor money raised because AI is hot. And around it goes. If you're wondering what happens when that loop breaks, the answer is probably nothing good. On top of that, the return on investment isn't clear. For all the buzz, AI still hasn't proven it can deliver long-term profits. Chatbots are popular, but they're expensive to run. Users love them, but most aren't paying. Free usage habits are hard to break. And even enterprise tools are still figuring out how to justify the cost. Nvidia sells the chips, Microsoft sells the cloud services, but if their customers don't make money on AI tools, the whole tower starts to wobble. It's like selling shovels in a gold rush where the gold turns out to be glitter. Nice margins until the digging stops. Meanwhile, AI executives are acting like it's 1999. Talent is getting billion-dollar offers. Yes, billion with a B. Not for revenue, not for assets, just to get someone to change jobs. This would be fine if everything else was in balance. But when AI salaries make sports contracts look modest, you know the market is tilting. And no one's regulating this. The US government has so far decided to sit this one out. According to Futurism, there's little interest in antitrust or regulation, which is handy for executives, but risky for everyone else. If this doesn't turn into a crash, don't expect much of a safety net. Now, here's what all of this means for small business owners, because you might be wondering why this matters to you. You're not building AI chips or buying up server farms. But here's the thing. When a massive part of the economy is floating on hype, everyone is affected if that hype deflates. If the bubble pops, stock markets will tumble, banks will tighten credit, investors will pull out of small businesses, and clients will delay projects or cut budgets. Even software tools could get disrupted. Remember how the dot-com crash and 2008 meltdown rippled into every industry? This could be bigger. So, is it a bubble or a bull run? Some analysts are still calling this a long-term bull market, saying the AI surge could last. They may be right. Maybe AI delivers enough value to justify the costs. Maybe the returns just need time. But if they're wrong, we're looking at the kind of collapse that doesn't just reset the market, it rewires it. So here's what you can do right now. As a small business owner, you're not here to predict the economy, but you can do a few smart things. Number one, don't overbuild around one tool. Use AI, but don't depend on it for everything. Trends shift faster than you can say GPT-6. Number two, watch how your suppliers and clients are spending. If they are betting the farm on AI, keep your backup plans ready. Number three, keep your messaging clear. In a noisy market, clarity is currency. Confusion is expensive. And if you want help with that last one, I've got something for you. My free 5-minute marketing fix helps you write one sentence that makes your business instantly clear to the people who matter. You can download it for free in the description below, or you can go to strategicmarketingtribe.com/fix. But what about you? What's one tech trend you jumped on that didn't quite deliver? I'll go first. I tried a few of those SEO writers. To their credit, the articles did rank well, but I was so embarrassed by the quality of content that I couldn't put my name behind them. Okay, your turn. What trend did you try? Let me know in the comments. I'm Vicky Sidler from the Strategic Marketing Tribe, and I post helpful news updates for small businesses every day.